Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 11th of September 2022, and we're reviewing last week's gold and silver price performance, looking at economic data presented last week and what is envisaged this coming week, and we give our forecast for the weekend. We also question the fact that the FOMC's decision on interest rates will be coming forward a week on Thursday, and therefore are expecting some volatility in the gold and silver price just prior to then. What will it look like? Let's take a look. Looking at precious metals first, gold rose $5 last week, rising from $1,713 to $1,718, having hit a high of $1,729 and a low of $1,691, a rise of just under 0.3%. In sterling terms, gold finished the week at £1,482, down £5, and in euros it closed at €1,710, that's down €10. Silver rose 80 cents, performed quite well, rising from 1807 to 1887. Having hit a high of 1898 and a low of 1786, a rise of 4.5%. In sterling terms, silver closed at £16.27, up 58 pence on the week, and in euros it closed at €18.77, that's up 0.62 euros. The gold to silver ratio fell from 94.8 to 1 to 91 to 1, still though holding above that 90 level, which all of us would admit generally is too high. However, with the recession looming, we may have to expect mid to late 80s, possibly up to as much as 100 at some stage. Now, looking at the prediction we made last week, we said we expect to see gold trade between $16.50 and $17.50, and we forecast silver to trade between $17 and $19. Well, gold traded within our predicted normal range, while silver broadly traded within our normal range, and then closed within that range, but did for a short time dip into our outlier range, that's $16.50 to $19.50, by 9 cents. Dipped just below $17 by 9 cents. Gold's range between high and low last week was just $38, very small, compared with $55 the previous week. And silver's range was $1.12, compared with the previous week's range of $1.54. We are going to expect much larger rises and falls this coming week, and we'll explain why shortly. Looking at other financials, Bitcoin jumped these past couple of days and currently stands at $21,344. That's up $1,494. All the crypto pumpers are out now shouting, Bitcoin's on the way up. The bottom is in. We're not convinced. Equities were broadly up this week too. The Dow Jones closed on Friday at 32,151, up 377 points on the day and up 833 on the week. The S&P 500 closed at 4,067, up 61 on the day and up 125 on the week. And the Nasdaq Composite closed at 12,112, up 250 points on the day and up 482 on the week. Now this means for the year to date, the Dow is down 8%, the S&P is down 10%, and the Nasdaq is down 21%. Oils were very, very marginally lower this week. In fact, so small was the change, it's virtually indiscernible. Brent crude closed at 92.84, down 18 cents, and WTI crude closed at 86.79, down 8 cents. The dollar index stands at 109, down 0.5 on the week. But it did rise above 110, it went to 110.2 earlier in the week. Now let's take a quick look at the economic data that was announced last week and what data is to be announced this coming week. Okay, taking a quick look at what was declared last week by way of US economic data. On Monday we had the Labor Day holiday. Then on Tuesday we had both the S&P and ISM services PMIs and indices. The S&P came in at 43.7 for August compared with 44.1 the previous month, and ISM came in at 56.9 against 56.7, but slightly higher than expectations of 55.5. The international trade balance was broadly in line with expectations of minus $70.6 billion for July. Then on Thursday, we had the initial jobless claims, which were actually both lower than the previous week and also much lower than expectations, though the continuing jobless claims figures have edged up ever so slightly at 1.45 million. Average consumer expenditures for 2021 were higher than the previous year. Consumer credit was actually lower and less than expectations, coming in at $24 billion, which may very well either reflect the fact people already borrowed out, or alternatively, banks are restricting credit. And then on Friday, wholesale inventories revision, slightly less than expected. Real household wealth, look at this for quarter two, down 20%. That's significant. And real domestic non-financial debt down 0.3% for the quarter. Now this coming week, we have more relevant and perhaps market-moving data. On Monday, we have the New York Fed 3-year inflation expectations, but perhaps one of the more important days, Tuesday and Thursday really, but they're all quite important this coming week, we have the Consumer Price Index, core CPI. Wednesday, we have the Producer Price Index. Let's not ignore that. And then on Thursday, apart from the jobless claims, we have retail sales, plus industrial production. And then on Friday, the UMich Consumer Sentiment Index and the 5-year inflation expectations. So the major market moves, if there are going to be any, are going to be in the run-up for Tuesday and then what's actually declared, and then again potentially on Thursday. Bearing in mind that the following week we are going to have the Fed making its decision on interest rates. So gold oscillated throughout the week within a relatively narrow range. This really was to be expected with few relevant economic announcements being made. On Friday we saw a bit of a rally which then petered out, and technical analysts are agreed that unless gold can gain the momentum to break above 1750 and then 1800, which is where roughly the 200-day EMA rests, then any uptrend can be ruled out. We have some rather weak psychological support at $1,700, and then a range of support levels between $1,680 down to $1,600. Some of the pessimists are again speaking about $1,500 gold in the not too distant future, and we are also gravitating towards that view. Silver bounced back this week from its week's low on Wednesday at $1,786, peaking on Friday at $1,898, falling back just slightly towards the end of the day. There really are two key target areas for silver at each end of the scale, $20 and $15. But really, from our perspective, 22 is the key on the upside. We have the 50-day EMA at 1950, which is where the brunt of any resistance is likely to lie. As long as the US dollar remains strong, silver will struggle to get much beyond this level. And we are rapidly coming to the conclusion that we are now almost certain that we are more likely to see $15 silver before we see $22 silver. And unless a full-blown recession is avoided and the dollar weakens, we shall see $15 silver before 21 and potentially even before $20 again, though we can still potentially foresee the odd bullish spike which may then fall back and fade. There was talk in recent weeks that the CPI in the US has peaked, and we shall see this week whether that is the case or not. Nevertheless, there would have to be a major shift in economic data to enable the Fed to pull back on its proposed decision, in our view, to raise rates by 0.75% later this month. So we're expecting more significant price moves for gold and silver this week, with the CPI and retail sales data being announced the week before the FOMC next meets. Let's also not forget, as we pointed out last week, that the Bank of England's MPC, that's Monetary Policy Committee, the UK equivalent of the Fed's FOMC, is also meeting on the 15th of September. And again, its decision could have an impact on the US dollar value in either direction. So with all this in mind, and of course assuming that the geopolitical position remains relatively constant, we expect to see gold trade between 1650 and 1750, similar to last week, with 1625 to 1775 as outliers. We forecast silver will trade between 1750 and 1950, with 1650 and 1975 as outliers, though we are expecting silver to dip back, unless of course the data is beyond expectation. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And we therefore, in the interim, wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.